Hi everyone. Today we're going to analyze a stock called Avalon Bay Communities. The ticker is AVB. Avalon Bay Community is a bit of a different animal than other stocks we've analyzed in that it's a REIT or real estate investment trust. Now, a REIT is basically a company that specializes in owning and operating real estate. Okay, so because of that, it has a few unique characteristics. So number one is they don't pay income taxes, and that's because if you think about it, most of their assets are real estate, so they pay a ton of property taxes. And secondly, the SEC allows them to not pay income taxes because they have to pay out 90% of their taxable income in the form of dividends to its shareholders. So end of the day, the shareholders, when you get a dividend, you pay taxes on the dividend on your personal income. So end of the day, the government still collects taxes, right? It's just not taxed through the company. Now, so basically, I mean, we can kind of understand it as any other company, except it's one that specializes in real estate and operating real estate. So now, why would someone want to invest in a REIT? Now, there's a few reasons. Number one is hands-off management, right? Some people like myself, I don't want to be I don't want to be chasing people down for rent, fixing, broken appliances, all the kind of management admin aspect of being a landlord. That's not appealing to a lot of people. And secondly is diversification. You may live in an area where you don't want to buy property, right? If you don't think the property value is going to go up, you don't want to buy property there. Third is some people are not comfortable with taking out a giant mortgage, right? That you're stuck with for 15 to 30 years, borrowing a ton of money from the bank, being indebted. A lot of people don't want to do that. And REITs are a great way to have real estate exposure without all the three things that I mentioned earlier, right? I mean, obviously, the returns are not going to, all else equal, it's not going to be the same as if you operated and managed a property yourself, because, right, you're kind of hiring professionals to do that, and they make a living doing that, so your profit margins are lower. But still, it's something to look at. And being that it's, like any other company, we still want to look at their enterprise value to free cash flow. We want to understand their valuation. We know what they do. It's very simple. They, own real estate and they rent it out to people. I'm going to do something a little different in that I'm going to leave the modeling part, the EV to free cash flow analysis, the cash flow analysis, to part two. And I'm going to first do a quick evaluation check because most of their assets are real estate. And with real estate, you can kind of get a sense of like how much is it worth just by doing some very crude, simple analysis, right? So first of all, I filled in our enterprise value for this company. So they have a market cap of $22.5 billion. That's how much their equity is worth. They've borrowed $7.6 million from the bank. They have some cash on hand. So that gives us a 29.7 enterprise value. Now, I've also went to their 10Qs and figured out, this is the latest we have, figured out how many apartments they have in each of their geographies, right? So they have a table that tells us how many apartments they have in each U.S. geography. Now, unfortunately, it would have been even better if they told us instead of the number of apartments they have, told us the maybe the average square feet per apartment or the total square feet for the entire region. Now, they didn't disclose that information. It'd be great if they did. So we have to make some approximations on our own, on square footage and on because to value, kind of get a gut sense value of the property, you need to know square footage, right? So what I've done is I've kind of gone to their website and just based on some very rudimentary, rough analysis, I've tried to approximate what's the average square foot per apartment at an Avalon Bay apartment. Now, we all know the smallest apartments, well, maybe you don't know. If you live in New York, the smallest apartments are in the city, in Manhattan. And they're the studio apartments, right? Look at these, 500 square feet, 600 square feet. Okay, this one's a little bit bigger. Let's look at another one of their apartments in the city. We looked at Highline. Let's look at, this is all the way out in Green Island, Great Neck. Let's look at this guy. Okay, so you know what? I mean, you can, do this yourself, but I'm just gonna, based on what I know, I'm gonna assume that all their apartments are only 550 square feet. I know that's not the case because they have 1 bed, 2 bed, 3 beds are much bigger than that. But for a rough analysis, I'm going to assume the worst case, kind of the most conservative case, which is I'm just going to approximate and say let's see if this company is worth it, if all their apartments in New York are the smallest, are studios, so 550 square feet. And I found this really cool website that kind of tells you what the average cost per square foot is in each city in the U.S. And I'm gonna do New York. Okay, and it looks like in the city center, the best parts of Manhattan, cost per square foot is $1,500. And that's the average, right? That could be a very nice luxury apartment, even though Avalon tends to be quite nice and luxury. But outside of the city, it's only $744. I'm just going to assume all their apartments are not in a good area, right? They're all outside the city. So that gives us 744.53. Okay. And then, so basically I've made an approximation, and turns out, based on that approximation, the average Avalon apartment in the New York area is about $400,000. Okay. Now in reality, it's probably a lot more because not all their apartments are tiny studios. But let's look at New Jersey as well, because this is New York and New Jersey. Specifically, I think based on what I remember, Hoboken. A lot of it is in Jersey City and Hoboken. Well, I wonder if Hoboken's here. Hoboken. That's not necessary. I just saw it too. Hoboken. I mean, it's pretty similar, $700, right? I mean, let's discount it even more. Let's assume they're all in New Jersey, not even New York. Okay, so that gives us cost per apartment of $392. That's how much apartment is worth. And then, so they have about 14,000 apartment in the New York, New Jersey area. So this tells me that, I mean, in a pretty draconian case, all of Avalon's apartments in New York, New Jersey, in the aggregate is worth about $5.5 billion. Okay. And then let's skip to another expensive real estate market, California. So I know that in Northern California, a lot of their apartments are in San Francisco. Let's see are they in San Jose? Yeah, quite a few in San Jose. Mountain View. Let's see how many they have in Mountain View. Not that many. 4. It'd be great if they told us if they broke it down even further and told us only 2. How many are in each city? So I'm not Sunnyvale, only 1. Union City. Yeah, so I think most of them are in San Francisco. Oh yeah, a lot of them in San Francisco. Okay. So again, let me see, how big are their San Francisco apartments? I'm going to assume they're the smallest ones. A studio is only 580 square feet. Okay, I'm just going to put 580. And then what's the cost per square foot? So I can't assume everything in San Francisco, but let's get a sense of how much San Francisco is, okay? San Francisco, because San Francisco is most expensive. Wow, San Francisco is even more expensive than New York, right? Remember, New York was like outside of cities, like around 700 something. San Francisco is 940, but the range. So San Francisco, let's just make a note. San Francisco is like 940. What about San Jose? San Jose is only 670. What is I wish I was better at U.S. geography, or I knew the geography of San Francisco or NorCal more, because they barely have any apartments other places. It's just like San Francisco, Mountain View. Pacifica has nothing. Pleasantville. Yeah, you know what? I'm just going to take an average of these two because that's where most of their apartments are. Also, I'm in the wrong spot. NorCal. And 580. And you know what? I'm just gonna discount it even more because, right, we're assuming all their apartments are in San Francisco and San Jose, but that's not the case. And they have some in Mountain View as well. Mountain View is also super expensive. But I feel like, let's just say, okay, let's say they have a lot of stuff outside of there. Say let's give it like a discount, right? Let's be conservative. All right, point. So it looks like their NorCal apartments, we've calculated a value about $5 billion. Okay. Let's keep going. Let's see SoCal. Where are their apartments in SoCal? Ooh, Los Angeles Metro. Oh yeah, they're extremely they have a heavy presence in Los Angeles, you can tell. So let's look at Los Angeles. Los Angeles, in the city is quite expensive, but outside of city is only 500. And let's just pick a random apartment in Los Angeles for them to see how big they are. Sure. Again, we're making a draconian assumption that that all their apartments are studios, even though, that's clearly not the case. They have 3 bedrooms that are 1,300 square feet. But to be conservative, let's assume everything's like a studio. Studio is like around 600, I think. Let's do 600. What else do they? What about Orange County? Yeah, they have like a lot, Orange County as well. Is there a big difference in housing price in Orange County? Orange Beach, no. What about, I think that's all Los Angeles, right? Yeah. Huh. Pasadena, Santa Monica, it's in Los Angeles. Yeah, they just have like a ton of stuff. Hollywood, that's all Los Angeles. So I feel pretty good about our estimate. I think it's quite conservative. Mid-Atlantic, New England. Is New England Mid-Atlantic? Washington, D.C. All right, anyway, so we've got 3 out of the way. Let's do this is Washington State. This is like Seattle. Okay. Seattle. Quite a few apartments. Let's get a sense of the average size. Whoa, really small. Is that really how small they are? Let's do another one. Yeah, they really are quite small. Let's just say 500 for Washington State. And what's the average property value in Seattle? This is a great database, by the way. 425. So their Seattle apartments are worth, in aggregate, about $1 billion, based on our extremely conservative estimate. New England, I'm thinking is like Boston. Massachusetts, yeah. Let's pick a Connecticut. Yeah, okay. Virginia, Florida, Maryland. Let's pick a representative city. Yeah, they barely have anything there. Yeah, Boston's probably where everything's at. Let's take a look at Boston. I'm assuming 500 square feet. Yeah, let's assume 530. Okay. Everything's a studio. How much are houses in how much are stuff in Boston? $462 outside the city. Wow, super expensive in the city. Okay, 462. Boston's worth 2.6 billion. What's Mid-Atlantic worth? What does Mid-Atlantic even mean? I think that's like DC, right? Mid-Atlantic. Yeah, I think that's Maryland. West Virginia, Maryland, Albany, Pennsylvania, New Jersey. Is DC Mid-Atlantic? Yeah, it is. Okay. I think that's what Mid-Atlantic is. I think they have a lot of apartments in DC. Connecticut. Mid-Atlantic Metro. Yeah, a ton of apartments. Baltimore. H Street. No, I don't know. Just pick one. Wait, I don't want a book tour. No, I don't. All right, let's see what they got. Studios. Yeah, let's do 500. So, I guess all the studios are like the same size across the country. There's no like 1,000 square feet studios, huh? Mid-Atlantic, let us check out DC. $340, but it's like half of versus city center. Expansion markets, that's like stuff there. I think it's like mostly like Denver. So let's see. Yeah. Florida is expansion. Florida, Colorado. So let's get a sense of Florida and Colorado. First, I mean, do we even need to do this? I mean, all the studios are like the same size, but let's just take a quick look. Oops, I've gone. See, we're really being super conservative because we know they own a lot of apartments that are like, they don't even have studios in Colorado. That's pretty cool. What about this guy? Yeah, they don't even have studios. But then we have to assume they're all one bedrooms. What about in Florida? Do they have studios? Florida, Boca Raton. Only have one apartment there. One, yeah, I think it's mostly like Denver. That's their growth markets. Margate. I'm just gonna say they don't. Let's say it's like 700 square feet. Okay. And then I'm gonna do Denver, Colorado. Again, it's super rough analysis. You can get much more an accurate picture if you spend a lot of time. But is it worth it? See, Denver properties quite cheap, only $260. All right, so we've basically approximated the value of their real estate. We made a few assumptions, right? We assume that all their apartments are tiny studios. We've also assumed, where applicable, we also assumed that the cost per square foot is for apartments that are not in the prime locations in those cities. Both of these are extremely conservative apartments or assumptions. And as a result, the estimated value of their real estate is about $24.4 billion. The market cap is $22.5 billion. That means the market thinks their real estate is only worth $22.5 billion. So I think even under our extremely draconian assumptions, the real estate is worth more than what the market is giving them credit for. Okay. So I think this is a good segue. I'm going to think about this, and we're going to do our free cash flow analysis and look at some other stuff in part 2. Thanks for watching.